Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. I have in the past talked a few times about buying options when stocks are in consolidations, right? And most of the time, actually, I think all the times I talked about it, it revolved around some sort of higher beta tech name that had basically entered into a consolidation after just a very volatile stretch, right? And I guess most of the time that would be a focus of mine on stocks that are in consolidations, right? I'm looking for something that used to be like a huge mover. It's going through a period of maybe tight trading or kind of like choppy back and forth, right? Option premiums start to contract, right? Because the overall volatility contracting, the average trading ranges contracting, right? So the option pricing starts to come down. And I do feel like that's something I see more frequently on tech. But there are other names outside of tech where you could also witness that. And I think Boeing is kind of in one of those scenarios right now. And um, we do kind of have like a playbook, right? Because we saw this happen in April, May, and then into June, right? You had um, stock had the huge rebound finally after the massive sell-off. Then it went through a period of chopping, consolidating. Then all of a sudden it broke out and went on like a parabolic run, right? Now it's like almost deja vu all over again. We're seeing the stock had the huge run, right? Huge run, consolidate, chop, break out and go. Huge run, consolidate, chop, and now it's working on a breakout and now potentially another run, right? And the thing with Boeing is because the overall level of volatility has been lower on this for a couple months, the average daily trading ranges has been a little bit lower. You are seeing some option pricing that isn't too outrageous, right? I mean, when the stock is going up 20, 30 points every day, the option pricing is through the roof. But when the stock is only moving a couple points every day, right, and there's some days where it doesn't really move much at all, then you see like that overall implied volatility contract a bit, right? So that's why I say it can be it can be beneficial sometimes to enter these types of trades while the stocks are still stuck in the consolidation, assuming that you have reasonable expectation of it resolving the consolidation, right? Because the thing with options is that they have a fixed time frame. So if you only have 4 weeks until expiration and the stock doesn't break out until the fourth week, then you could really be in a bad position, right? So getting involved in consolidation, sometimes you can get better prices, but you also need to have like a reasonable expectation that it's going to resolve that consolidation soon. So then you get the implied volatility expansion, you get the range expansion, you get the volume coming in, right? And that's when you can really get like a multiple type tailwind for those contracts. The implied volatility expansion, also the stock moving in your favor, and the average trading range expansion, right? So I feel like Boeing starting to get into that scenario, starting to set up like that. Still not breaking out just yet, but it does to me seem like it's getting close. So maybe something you want to keep on your radar. All right. So if you like this video and you're looking for more information on options trading or option swing trading, definitely follow up with the link in description of the video for more information on options to play. Hope you guys have a fantastic night. Stay well, and I will talk to you all tomorrow.